Vandana Hari is founder and CEO of Vanda Insights, joins us now on the show to talk about this. Vandana, thank you so much for your time with us this morning on NDTV Profit. Just let's start with your first comments on the quantum of hike that OPEC Plus has announced, and what do you think it does to crude prices?
Yes, good morning. So just as you were mentioning, the market had baked in another target increase of about 411,000 barrels per day, which would have been the fourth month they were going on this accelerated return of their cuts. Instead, they went with a 548,000. So the last 3 months, they had tripled the pace. Now they have quadrupled the pace. It doesn't change the calculus for the market in a big way because the accelerated unwinding of cuts was more or less baked in. So it's a small change in that. So if you compare with 3 months ago, I think that when OPEC Plus, the group of 8, pivoted quite dramatically to accelerate the return of barrels, that was a major change in calculus for the market. This one isn't. So while we are likely to see some additional pressure on crude, I don't think it will be a major sell-off. I think also the market attention is now increasingly shifting towards the macro picture. And within that, we have what happens to the US tariffs and trade deals, which have just 2 days to go before Trump's deadline ends. So there will be a bit of wait and watch in the oil market with regard to that.
Vandana, clearly, from what you're saying, firstly, this was something that was eyed. However, the hike that was announced over the weekend does not seem to be reflecting in the prices that did come in terms of last week. So if you're expecting to see pressure from here on, what's that band that one should be watching out for?
So I think a lot depends on the macro picture that emerges once the dust settles on the US tariff tensions. There are some reports that perhaps the deadline will be extended to August, in which case we just see lingering uncertainty. But if not, in the next 2 days, let's imagine if the US delivers some deals with the major trading partners. I think the EU and China, specifically with China, they have another month to go. The deadline is much later. But the expectation is that they will be try and rush to have an agreement with China as well. I think that has the biggest impact on sentiment with regards to the global economy. So taking all of that into account, so the possible scenarios are either we have just lingering uncertainty for another month, or we have deals. And mind you, the deals are not expected to roll back all of the tariffs that Trump had threatened on the 2nd of April. They're just expected to bring the tariffs down from the reciprocal levels, but still will be way above what they were until 2024. So general expectation is for headwinds for the global economy. Keeping all of that in view, and the fact that OPEC Plus is is likely to return all of the voluntary cuts in by September, I think we are seeing slightly oversupplied market, which to my view corresponds to about high 60s average for Brent through the second half of this year.
High 60s, okay. I just want to understand, Vandana, one last thing, which is with regard to supply in the context of Donald Trump having made it his stated policy, drill, baby, drill, and this is something that is panning out globally as well. Where is the culmination point for the unwinding, and when do you expect that to take place? And in the context of an expectation that growth may not be as strong for the global economy, particularly for the two largest players, and China being a huge importer, from that perspective, do we see a further worsening of demand-supply dynamics at a time when output does not seem to be going anywhere? So therefore, do we head lower from those high 60s levels if you see a dramatic change in economic outlook for the Chinese economy and for the US?
So on your point on drill, baby, drill, the message seems to have been taken by OPEC Plus, but not the American producers. So what we are seeing happening, especially with the shale patch, which has been delivering the biggest growth in US production for the past many years, is that they're actually ramping down. We are seeing a major a steep slide in the oil rigs that are being deployed, in the fracking equipment that is being deployed. So while the US Energy Information Administration still expects a modest growth in US crude production this year, I would think it's probably going to be closer to flat. So I think we can assume that at current price levels, which we can expect will remain. There's not going to be a dramatic improvement in crude prices. We can assume that US crude production is either going to plateau or going to show a marginal growth. Now on the demand, but as I said, the supply supply boost is still happening, and an oversupply is still a likely scenario because of what OPEC Plus is doing. As far as demand is concerned, and you mentioned China, very, very important, Chinese economic sluggishness predates the tariffs tension. To a large extent, it also predates COVID, because China is completely rebalancing its economic model, which is like once in a generation sort of shift from more manufacturing and export dependent growth to more services and internal consumption growth. Right. So I am quite passive on Chinese oil demand growth. And that's a big reason for continued pressure on oil prices.
Got it. Vandana, thanks so much for joining us this morning. A pleasure speaking with you as always.
Thank you.